Next is our last learning session of the day, and it will be a speaker session featuring Lee Gearhart, Director of Partner Sales at iFlip Invest. The intention of this presentation is to introduce you to the next generation of investing and show you how technology is changing the investment landscape. iFlip is an acronym for the Financial Learning Information Platform. It is the first true AI-driven investment platform available to retail investors. They empower everyone to preserve, protect, and grow their wealth. Welcome, Lee, to the stage.
Great. No, it's the end of the day. Hopefully you guys have enough caffeine, hopefully not too much. Myself, I was kind of starting to hit a wall. So hopefully we can get through this, get to the networking after, enjoy the rest of our night. So like they just said, my name is Lee Gearhart from iFlip Invest. We're kind of right in the middle of internet and also the money side of things. So we apply our AI to manage stock market investments for you guys. So today's topic, how to leverage AI to protect your assets. And yes, I did capitalize the first three letters of assets on purpose. All right, so we're going to start with this, kind of a little agenda, who we are, investing for the average person, you and me, not necessarily the folks on Wall Street. Flaws in the system, with where there's any problem or any flaw, there's an opportunity for a solution. So we're going to talk a lot about that today as well. The modern approach, obviously AI is that, what AI is, how we use it, how it performs, things like that. I'm sure you guys are fairly confident in AI. But we'll still go over that for a second. And then lastly, the Wall Street myths. So without further ado, we do have to start with the purpose though. And I kind of think of business as, you're out to solve a problem or you're around for a specific reason. And this purpose or mission statement that we've created. It's something we spend a lot of time on, but I think it's really powerful. So it's to empower everyone to preserve, protect, and grow their wealth. So when we say every individual, we truly mean everyone, not just the millionaire or billionaire or the person, who works in IT or works in finance or has, an extremely good level of understanding of the financial systems. We want to make this for everyone. So let's jump right into it. With that purpose and mission in mind, this is kind of our intention. When we built the company, we set out to do four things. So the first being to be better, and what I mean by that is to outperform the markets, more specifically the S&P 500. So my take on it is if you're not going to do better than, just buying and holding the S&P 500, why do anything else? You'd probably be better off just buying and holding the market. Be easier, simple user interface, easy to use. That's something I'll tell a quick story. I was meeting with a gentleman on Zoom about probably a year and a half or so ago, and I did a little demo of our platform. And at the end, I'm like, "Hey, do you have any questions?" And he's like, "No, I just, it was really easy to understand, really easy to use. It's not like I won't name their name, but a big place that we've all heard of." And they said, "I'm looking at their system and it looks like a freaking airplane cockpit. I have no clue what the hell any of this does." So it's always nice to hear that people see our system as something easy to use. The third thing, less risk. So we want to be able, the intention is to do better than the S&P, like I said, but we also are able to do that by risking less for our investors. Just a quick thing, since we're in Vegas, we could all go put some money on a roulette table. Everyone picks a different number. Someone's going to win and they're going to say, "Hey, my return is great. I what is it, 35 to 1, something like that. I 35 to 1 my money." But the other 35 people, they lost. So they obviously exposed themselves to a lot of risk. We don't want to do that for our customers. Lastly, cost less. So we're a software company. We just charge a monthly subscription, free up to $3,000, $5 a month up to 10K, and then it scales up a little bit from there. And when I talked at the start about business and solving a problem, I truly do think every business is created for that. And again, when I say that we're around for the everyday person or that average person, it's because there's problems, quite frankly, for them. First thing right at the top there, we've been conditioned to believe that 9% historical return comes without risk. It's sometimes seen as like a machine where you put money in, you don't look at it for a while, and when you look at it again, you really hope that there's a lot more in there, or at least a little bit more, and that there's no risk with it. Secondly, we accept the fact that advisory fees, they're just complicated. Sadly, it's been designed like this for a reason. So we just say, hey, I don't know how to do this myself. I'll just pay those fees. Thirdly, and this has been more apparent, I would say, in the last, I don't know, 5 to 7 years, pretty much, since Robinhood came out, people, and especially that was amplified when COVID started. People are at home more, they have more free time. They're like, maybe I should try this trading thing. Well, one, you don't know what the heck to buy, probably. You might. But two, you have to figure out the right time to buy it. And thirdly, you have to find the right time to sell it. Our AI kind of automates that whole process for you guys. And lastly, I bet if I had, and I can't really see all the way to the back, but I would have you guys raise your hands. Who's heard before? The markets go up, the markets go down, but you just got to stick it out for the long haul. I'm sure, yeah, I see some hands. It's just sadly, it's not true. So we're kind of left with two options today. Option one, go to a financial advisor, go to a financial planner, give them your money, and you look back at it 6 months, a year, and hope that things are doing well. Or option two, which has a little bit more of a barrier to entry. Arguably not, I guess, but to do it well, it has a higher barrier to entry. You learn how to trade yourself. You want to keep the control of managing what your money goes into, but you also have to figure out how the heck, again, the same three things I said, what to buy, when to buy it, and when to sell it. So this is example one. So on that first option of giving your money to an advisor or a planner, and by no means am I trying to say that these people are bad. They're not at all. But oftentimes, if you did that today, your money would fully be invested tomorrow. Which it might make sense to do that. It probably doesn't, especially with what the market's doing right now. So if you were to do that, you'd go into likely a mutual fund. So we're going to talk about that. And again, I bring this up, and I know this is not about mutual funds, and you're not here to learn about that. But that's typically what the average person is invested into. So perfect. So there's 4 types of fees. I'm just going to bring them all up here. So disclosed costs, those are the things you see like I guess when we were out and about a little bit more, when you walk by a Schwab or a TD or something like that, you might see a number on a window and it says, hey, 1%. Those are the disclosed costs that they have to tell you about. Sadly, the 2 through 4, for whatever reason, they don't have to tell you about it. So it's really hard to find all these fees that you're paying in a mutual fund. And I don't want to spend a ton of time on this, so I'll kind of just go through it. These are some of the examples of disclosed costs. You got your front end loads, back end loads, purchase fees, etc. On average, that's going to run you about 1.19%. So it doesn't sound too bad. You're like, hey, if my money's being managed for 1% to 1.25%, it's not too bad. But there's more to it. The hidden costs, these are the ones that you don't see. When they're trading when they're trading for you, there's obviously commissions involved with that. This is a big one. I won't get into it sadly too much, but if you guys are familiar with the bid-ask spread, they basically do the reverse. So instead of buying something at the bid, selling it at the ask, they're actually oftentimes doing it the opposite way. So basically you're getting the short end of the stick on both sides of it. Third, price impact. So because a lot of these funds have so much money in them, they oftentimes can move the market. So by them selling something, it's going to have I can't even say the word. It's all right. I'll skip it. But there's going to be effects that come after that. If they buy something, then the stock might jump up even more. If they sell it, it's going to come tumbling down, likely because they have so much money in these funds. On average, just under 1.5%, so 1.44. So if you're doing the math, it's getting to be more expensive. I'm going to keep. This is just an example. I'll bring it all up real quick for you guys. So let's say there's a stock inside the fund that is $50 a share. The stock drops down to 40, they sell it. So if you got in at 50, they sell it at 40, you've lost $10 a share, right? It's not too hard of math, I don't think. But if the fund initially bought the stock at $30 a share, the fund as a whole has actually made money. So sadly, you're going to have to pay taxes on that, even though you didn't get to experience any of that gain. Sucks. On average, that's just over 1% or so. And then the last one, there's no better way to say it than sneaky behavior. Things like window dressing, risk shifting, shirking, and then lastly, buying cold IPOs. And by the way, I didn't say it at the start. This was actually a study that Forbes did. They had 4 different universities breaking down all the costs of mutual funds. This is only about a year or 2 old, so I imagine it hasn't changed very much. That one's the biggest one, sadly, about 2.5% or so. So what would the results be? Say, on average, the market might be going up somewhere between 7 and 9% on a given year. So easy math, you put 100 grand in, you'd expect if you make 9%, you're going to make $9,000, right? Well, if we back out all those fees, you're only left with actually about $2,780. So I'm not going to do the math here, but you're not making as much as you should be. And over time, these fees come right off of your returns. So even just a simple 1%, that turns your 9% yearly return into 8%, which after 30 years here, your portfolio has been decreased by 25% just in the way that you're charged. We're not even talking about, the performance of the fund or anything like that. It's just the fees. Example 2, and back to what number 2 was, learn to trade yourself. So you might do that, you might not. And the argument for the advisor is, well, you can't miss the best days in the market. You're going to be so much worse off if you do. So let's get you another example here. So let's say 20 years ago or so, 1998, you had $1 million, you put it into the market. 20 years later, that $1 million would have turned into about 5 or so. So pretty good. Now, if you're just to miss the 10 best days in the market, like the advisor said, hey, you can't miss these because they're extremely important, your portfolio would actually be cut in half to about $2.5 million. Doesn't sound very good, right? But what they don't tell you is that if you were only to miss the 10 worst days in the market, that million would actually be worth 10 million 20 years ago. So what's more important? It's more important to miss the 10 best days, 10 worst days. Clearly the market goes down faster than it goes up, right? So we want to miss those worst days. That's why it's titled risk less. This is just this in a graph. So the black line in the middle there, that's the buy and hold. Orange would be missing the 10 best days, and then blue would be missing the 10 worst days. And just to give you a frame of reference of why we say risking less is so important, we're somewhere between that 10 and 20% loss right now. The market, when I checked this morning, it was down about 17%. So as it shows on the right there, the time needed to recover from that correction, right now we're probably sitting at somewhere right around 3 years or so. Even if the market starts going straight up, which arguably probably won't happen, you're going to just be making up for losses. And so what's our solution? So as they kind of said at the start, we've created how we apply our AI is in the stock market, right? It decides when it's the right time to buy. It decides when it's the right time to sell. Basically, all you have to do is pick from the different portfolios that you have to choose from. So that tells the AI, hey, I want to invest into Apple and Amazon, and maybe it's Facebook or Netflix, whatever you want it to be. For the most part, we have about 600 or so stocks to choose from, and the AI is going to manage that all for you. Some things that are a little bit different about us is that we charge, like I said at the start, a monthly subscription. So that's the only fee you'll ever pay. I'll show you that at the end. But there's no asset under management fees. There's no, we're not taking a percentage of profits or anything like that. And this is probably the part that you guys are most familiar with. We probably don't need to get into this a ton, but there is a true difference between algorithms and AI. Oftentimes in our industry, AI is used as a buzzword, and it might be the same for you guys as well. It's kind of used in like marketing lingo of, hey, we have AI. Well, is it really AI? Is it not? Sometimes it's hard to break that down. One question you can ask to figure out if it's actually true AI is basically, does a human need to interfere with your system or your algorithm, or can the machine learn on its own and change its own rules? We happen to be the only one in the industry that actually has the machine changing its rules, updating it every single day, and staying in tune with the markets. This gentleman's in the back over there. This is Kelly. I call him the brains behind our operations. So he's created what we call our smart folios. I'll try not to embarrass him too much, but he's a pretty dang smart guy. Went to some very prestigious schools at very young ages, like Stanford, University of Chicago. He was on Wall Street managing a ton of money, and he was actually pretty much retired. Correct me if I'm wrong. Shakes his head. Yeah, kind of. But then he got back into this, and I'll shorten it, but what I was told was, he wanted to take this level of sophistication that the Wall Street folks had and bring it to the masses, bring it to that everyday person. So through the use and advances in technology over the last, 20 or so years, we've been able to automate things he used to have to hire people to do and manually, obviously, run all these processes. So those are some names of our smart folios at the bottom there. There's SPY Plus. You might have heard of FANG, Facebook, Apple, Amazon, Netflix, Google. I guess Facebook is now Meta. We might have to change that, but Meng doesn't sound as good as Fang, I guess. Here's one of them, the Spy Plus. So this is just going back to 2017. That's about when we were founded, a little bit before, but basically, and I'm sorry, it's a little bit far for me to read. If I remember correctly, it's about 16 and 28. Yeah, so the gray line at the bottom there, that's just a buy and hold of the S&P over the last 5 or so years. So pretty good, make about $6 grand. I don't think many people would complain about that, but what they don't tell you, and what we're here obviously for, to explain the power of AI. So that orange line is what our performance has done, about 24 or so thousand. So pretty much double the return that you would have gotten just in the buy and hold. And then this is just the S&P this year. So like I said, market's down about 17% or so this year. Our systems, it's still down. It's in the red. It's down about 3.75% or so. But again, 3.75% is a lot easier to get back than 17, right? You might make that back in a month or a quarter, something like that. Here are just some of the signals on it, on more of like a trading chart. So the blue dots are when we bought, red dots are when we sold. So we've really only made about 4 or 5 different trades this year. We've been in cash a lot, which to some people might sound boring, but when the market's going straight down, boring is pretty dang good. I know I like it. This is the last 8 crashes. So the ones that are circled on the right there, that's live data from when we were, really we're in the 3rd crash right now. It's not complete yet, so we can't add it onto here. But on average, over the last 8 crashes, we would have saved our customers 24%. Pretty powerful. This is just a snapshot I took. And sorry, it's about a month old. I had to get them the presentation before I got here, which is fine. But basically, that's what the platform looks like. It's hopefully very easy to understand. Show you what you own on the right there. Everything towards the top is more specific to your account balance. So it'll show you the money in it, what's actually allocated in the market. It might be hard to see for you guys, but the 3rd box there where it says open P&L, and it's a big old red number. This is down 10,000. And this is actually, it's not my account actually, but mine looks somewhat similar. So it's hard to read, but it says manual trading, and it says it's down about $11,000. And the AI is actually made just under 1,000. So by no means do we try to say, hey, the AI is so much better than the average trader, but even people that work in our company, that trade a little bit themselves, doesn't really add up to what the AI is doing. I have a couple QR codes for you guys. So option 1, we have a booth just right out there. We'd be happy to give you guys a demo while you're here. If for some reason that doesn't fit into your timing, you can always scan this QR code. I'll leave it up for a second. It'll be a demo with me. I can answer any questions you guys have, show you the platform and all that. And then the other one, I don't see anyone taking pictures. It's just to our website, so you can find out more information there. And then lastly, we have the pricing. So again, up to 10,000, only $5 a month. Caps out at 147. You can also pay yearly and get a couple months for free. And I think that is it. Any questions I can answer real quick? Not sure how we're doing on time. Not on my phone either. Perfect. I think if I heard correctly, the white box, if you guys have any questions. We're also, we do something called the iFlip mailbag. So once a month on Wednesdays, we have questions sent in by customers and people, learning who we are. We'll actually go on YouTube live and answer those questions. Since we knew we'd be here, we figured if anyone wanted to come out there and ask us questions, if you're okay with being on camera, we'd be happy to answer those, post them to our YouTube channel, and just get the general questions that people are getting by seeing us for the first time. So if you guys want to come out for that, that would be awesome as well. Any questions? I don't think so. All makes 100% sense. Perfect. Well, I'll give you guys about 5 minutes here. Oh yeah, go ahead.
Okay, so if I understand this correctly, what we're saying is the myth of you write it up, you write it down, but you're in for the long haul. And that's sort of like that's a myth, and it's a broken concept, particularly the way the markets are these days, right? Absolutely. So Flip is really all about finding the sweet spot and
Yeah.
leveraging that.
We,
And
we want you to be in cash when the market's doing what it's doing right now, so you're not losing all that money. And
Mhm.
when things look more favorable or mathematically in your favor that it's a good time to be in, then we want you invested because it looks like we can make money. Absolutely.
so is your AI telling us suggesting what we may want to invest in? I'm trying to
Yeah,
understand as a real beginner how you would even.
absolutely. So we have, I consider them like pre-built smart folios. So we have about 12 different options that you can see what's inside of everyone. In other words, I'll use the SPY Plus. So that has S&P 500 and Apple in it. Basically, if you're investing money into that, you're telling the AI, these are two things I want to own. So that's already set up for you. We do have one portfolio that actually the AI picks the stocks for the quarter. So it's called our 4Q rotate. We use the AI to determine which ones basically have the highest directional beta, meaning which ones are going to do the best for this particular quarter. So it's kind of a both, I guess. I wouldn't suggest, as a beginner, it might sound complicated. It's really not. You set up an account, get some money into it, tell the AI what to buy, and you're off to the races. And we can help to an extent with that.
Understood. So is it strictly the what's in the market, or is something like Ethereum and other types of?
Crypto is probably coming sometime next year. And I don't want to speak for anyone else, but we kind of stumbled upon it. We did a lot of testing in crypto, Bitcoin, Ethereum, that sort of stuff. In some cases, the AI actually did better on crypto than it did in stocks, which is our bread and butter. So it was an obvious correlation. So, but right now it's just individual stocks and
Gotcha.
ETFs.
Thank you.
Yeah, thank you. Any others?
Hello, I have a question. How frequent does it trade?
Great question. Not very frequently. So it's by no means a high frequently trading system. Like I was showing on one of the slides of the SPY, I think we've made 5 or so trades this year. It depends on the portfolio. Some portfolios might have up to 13 different things in there. So you might, with a portfolio with 2 things versus 13, you could probably expect more trades in the 13 things since there's just more to trade there. And you can have multiple portfolios, but still the range is probably somewhere between, I don't know, 5 and 15 or so a year, not too frequent.
What's the average of the profit rate for
The
that?
average returns.
Yeah.
So there's so many variables on it. I give a wide range. I say, the normal range might be somewhere between like 8 and 20 or so percent. So high single digits or, even up to 20. But a year like this year when the market's down 17, I think a lot of people would love to just not lose anything. So it does depend.
So does it support short sale and long position, both long position and short position?
I'm sorry.
You mean buy and sell, right?
Mhm.
You could buy long, you could short sell.
Oh, like shorting.
Yeah.
Does it short? So no, we're either long or in cash. So at least not today. We're not shorting. We have a lot of IRA money and things like that. That either one, you're not really able to short, or 2, it's just too much risk for the customer that we typically have.
So do you trade just in weekdays?
Do we trade what? I'm sorry.
In weekdays.
Oh yeah, yes, when the market's open. Yeah, so Monday we do all of our trading on the open of the market. So like I don't think we bought anything this morning. We very well could tomorrow morning. But yeah, just the weekdays.
So what's the best, I know you have different account portfolios, different user pick different, stocks. So what's the best of the top 10 return rate in your account management?
We can, if you come to the booth, we can show you a lot more of it. We can go through all the different portfolios if you'd really like, because they're all, some are more aggressive, some more conservative. And there's no real one blanket statement that'll get it all, I guess.
So I was seeing, like in crypto field, there is a word crypto competition on the return rate. Different company compete on that to try to win the competition.
Okay.
So I'm not sure in the stock field, is there a similar kind of competition?
I would say let's take that offline. I'm not 100% clear on the question, so I don't want to give you any bad info or not answer your question.
Okay,
I'm sorry.
that's okay.
Thank you for all the questions.
Thank you.
One
There we
more
go.
question. So,
Yeah.
what kind of reporting do you provide for taxation and things
Yeah,
like that?
great question. So some of the accounts, that you are subject to taxation. If it's say an individual account in your name, we supply all of those. In say an IRA, the cost basis doesn't necessarily matter because it's in, a tax advantaged account, whether that be tax deferred or, paying the tax now and letting it grow forever tax free. So it depends, but we supply, our broker dealer supplies all that for you. So no one's getting in trouble with Uncle Sam. Good. If there's any others you guys forgot of, like I said, feel free to come to the booth. We'd be happy to answer your questions there. I think we have a recognition session next, and then we'll be off for the rest of our night. So have a good one, guys. Thank you.